following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. On the week after the holiday week, which is always a fun week to have happen. So what we want to do is, like we usually do, we're going to start out with our DAX chart. If you'll notice here, we have a very, very unusual pattern here in the DAX. If you'll notice here, for the past 2 weeks, ever since the election night, you can see we've been in a very tight trading range of about 180 DAX points. Usually, technical analysis will tell you that the breakout of this range will be where the market wants to go. So sort of keep an eye on that, because you know that there's a high correlation between the DAX index and the E-mini S&P 500, the Dow Jones, and not the Russell. The Russell is out there in the area of where they have the yellow brick road and the little dog. I can't remember that little dog's name. Not Tootsie. What was that little dog's name? Oh, shucks. I've seen that show a million times with my daughters, and I can't remember the name of the little Toto. Thank you very much, boys and girls. Little senior moment there. So anyway, that's what we're watching today with the DAX. Also, you know, we're watching the New York Stock Exchange Index. It is still has not made new highs. Where it looks like this morning will be a tiny bit lower. Another great buying opportunity, it looks like. So we'll see if that's going to happen. The big thing that happened on Friday after the show was the fact that the gold market went down, and I'll post this to let you folks take a look at it. You'll see here that the gold made a perfect 61% retracement from the low that we made back in December. That was to the exact 50-cent level. The number was 170.90, and the low was 170.40. So that's pretty close. Now, we've rallied $25 off of that low between late Friday and Sunday night. But now with the euro selling off again, it looks like we are going to be possibly be retesting it. These markets are so susceptible to what's going on with the dollar index and the euro. Is just truly amazing. And last night when the euro rallied 100 pips, you know, gold was rallying. It was up about $18 at one time. And then as soon as the euro started to sell off, then you're looking at a simple place where the market was going to sell down. And now we're approaching a 78% retracement here on the euro, testing the lows that we made on Friday. Any move below 105 in that euro would certainly be a really good indication that we are probably going to go much lower in the euro. But there's a lot of things happening, and one of the things that people have talked about here in the United States is what's going to happen in Italy on December 4th when they have a referendum about their not independence, but their I'm really having a hard time with words today, boys and girls. Hold on, let me think what the word is. Their articles of incorporation, articles of independence and stuff like that. They're changing some of these things. It's not a question of whether they're going to leave the euro or not. It's not like a Brexit vote, but these are very, very important things. We have lots of friends and students in Italy, and they've told us, you know, how important this election really is. And there's a lot of, you know, give and take on both sides. So it's not like an 8-1 where the Brexit was going to stay in the zone where it didn't. The Italy thing is more like 50-50. So there's a lot of turmoil going over there, and that will affect the eurozone to some extent. Because if Italy would leave the euro zone after what the UK did, boy, that's really going to make the euro very, very shaky. Remember, there's 27 countries into the euro. 22 of them are actively traded. Actually, I think that, so we'll see if this is going to be, something that'll be coming down the road. We started with the euro back in the late 90s, and the euros had a range as high as 165 and as low as 65. So a 100-point range in the euro is really, really very, very, very dramatic. We've been at this level here now for, quite some time. Now, what's really, someone's asked a question about Castro changing anything. No, I don't think that changes very much. I think there was in the process of moving towards, a freer economy down there, but I don't think that that'll change very much right away. His brother, from what we understand from the news, if you can believe anything in the news, is just as ruthless as he was. So anyway, they mentioned in the news that he had survived 600 assassination attempts, if you can believe that. I don't think this man was a very loved man. When you speak about loved men, folks, we lost someone that'd been around the financial markets forever. Howard Ruff from the Ruff Times. Most of you folks don't remember him. He was very famous during the 70s and 80s. He was one of the first guys like Jim Sibbett that was really heavily involved with the gold market, and gold and silver. He passed away this past weekend of Alzheimer's. He was 85 years old. Folks, you're not going to believe these figures when I tell them to you. He had 14 children, 79 grandchildren, and 48 great-grandchildren. And yes, he was from Utah, and he was a Mormon. But can you believe that many grandchildren? Oh my gosh! That was really, really something. And anyway, he was really, really instrumental. And I was fortunate enough to be on a couple panels with him during my days at Drexel, and then some of the days when I was at the CME. But he really a gentleman. He was really was loved by everyone. He was a nice guy. So he will be sorely missed, I'm certainly, by his family. But anyway, let's take a look here at a couple of things that I think look, very, very interesting here from the standpoint of these patterns that we watch. If you'll take a look here, I want to put up here the Euro Weekly just to show you what's happening with this, because of the fact that we took out the lows of last year by only 6 pips last week. And that was very, very surprising. That's why I was expecting a rally today, which we did. We rallied over 130 points off the bottom, but now we're pulling back to a 78% retracement of that move. But what's interesting here is that we have Mario Draghi is talking today in about an hour, I understand. So that'll probably bring some more volatility into the euro also. Now, if we take a look at the euro on a little bit shorter time frame, you'll see that this is a place where we took out that low from November. It was actually December 1st of last year. We took that low out by 6 pips, and we rallied all the way up to the 106.70 level last night. So it's going to be interesting to see if we can hold this 105 level, because if we can't, that's telling us we're going a lot lower.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at the gold market. As you can see from the action that we had here on November the 24th, that was actually during the Thanksgiving night trading. It didn't even do that on the 25th. As you can see, we rallied up to we rallied $25, and then we backed off to exactly a 61% retracement. That took you down to the 1279 level. We closed the day at 1183. Those are 11 handles, not 12. 1183, and then last night we had the rally that took us above those high at 1192. We rallied another $20 up to the 1198 level, and from that level we backed down another $12 to the 1285 level, which so far has held. Now the $64 question is whether the euro is going to hold. I understand that Draghi is speaking now. Mario Draghi from the EU is speaking. So what he's talking about remains to be seen, but we will find out shortly by the action that we see in the foreign exchange market. So these are just some of the things that we're looking at today. What's interesting, if we take a look at this, of all the numbers that we're looking at with the gold and silver and also, platinum and stuff, let's just look at platinum first here, because it's also a very interesting one here to watch. On the platinum, you'll notice that we made a 78% retracement of the down move. That came in, and we've rallied about $14 in platinum so far. If we look at silver, we're going to be looking at a market that went down and made the 707. Now, someone always asks the question, how do you determine which one of these numbers is going to be important? Well, sometimes the difference between the 61 level and the 707 is, very, very small. If that's the case, it doesn't make a whole lot of difference. But in the case of silver right here, that distance is better than $1,500. So you have to decide, whether you want to take your risk at the 618, and then usually you have to risk 15 cents in silver because it moves around so violently. In fact, it's a lot more volatile than the gold. Gold is by far, much easier to trade. So, but the pattern is still there. And if you'll notice that the silver pattern, you also have a 3-drive pattern that started back in September. It's very, very symmetrical from highs to lows. The ABC patterns are equal, so this is another place where some of these things are coming together. But I still think the one that means the most is that 61% retracement on the gold at the 1170 area. That's very, very important, because if you go back and look at the gold chart on a weekly basis that we've done many times here at TFNN, you'll see that these numbers, they're really spot on. They're not off by $4 or $5. They're usually within $1 or $2 of the exact numbers that we're looking at. Why that occurs, of course, remains to be seen. Now, the next thing we need to talk about, of course, we don't have any guests today. This week, I hope to have a couple of guests. Rich Anderson should be back in the office this week. He had his father-in-law, who had been sick for quite some time, passed away. He was very, very famous in the state of Minnesota, where he was in the Businessmen's Hall of Fame and had all kinds of awards, a really wonderful philanthropic fellow. I met him one time, and he was a really, really humble guy. You'd never know that he was, very, very famous, that's for sure. Now, we're looking at a couple of things that I think are important here, one of which we need to look at, and that is this chart that was forwarded to us by Kevin Murphy. He is one of the gentlemen one of the two gentlemen that I know that actually studied under Bill Ehrman. And this is the chart that Kevin sent to us last week. And as you notice here, that all of the key dates. Now remember, this is all related to time, folks. This has nothing to do with price. This is a time-related chart, has zero to do with price. And what they're looking at here, the time sequence that we're looking at based on these templates and Fibonacci sequence trading days and stuff, comes in today on November the 28th. And remember, tomorrow, the 29th, is a new moon, which will be also important, and we know that the market has a tendency to make highs and lows near these new moons and full moons. But again, these are only probabilities. But this is a very, very interesting chart that we're looking at. We've seen the the long-term ramifications of some of these other things that we're watching. Let's just take a quick look here at the Dow Jones Industrial. Now, this Dow Jones Industrial does not have overnight trading, because this is not the futures market. I don't know if you folks remember this, but back in the days of 1982, the Chicago Mercantile Exchange, with Leo Mohammed running the show there, and his first lieutenant was my best friend, Byron Tucker, they were doing their best to try to get the Dow Jones family to use the Dow Jones Industrial as the first index. They wouldn't have anything to do with it. They thought it was like gambling. They wouldn't touch it. And so what they did was they went to the S&P, and the S&P, of course, did it. And then shortly after that, about 6 or 7 years, they came out with the Dow Jones, and I believe the Dow Jones was brought out by the Chicago Board of Trade, as memory serves me. And then the NASDAQ came out. I think the NASDAQ came out before the Dow. Yeah, the Dow was the final one. So, but what you notice about this chart here, you're noticing that, not counting the overnight market, because, see, the Dow was down 800 points that night on the election night. That would have taken it down to 17,400 or even a little bit lower. And then from that level, it went up and made a 1.618 expansion. But if you put that 800-point drop into this, you'll notice that we've gone up and we've made a 1.27 expansion. That's what we've done in the Dow Jones E-mini contract. So even though the Dow Jones is not showing it, the ratios are still coming together at the same time. So this is what's amazing. Now, we've had this tremendous move that the Russell has moved 22% in a matter of since November, in 2.5 weeks. It has been up 15 days in a row. That by far breaks all records, going back 31 years to find that record in this. So you want to pay particular attention to this, because this is certainly an outlier event. Folks, one thing technical analysis told me after looking at this stuff for, 6 decades, is the fact that this is not how markets start. this is how markets end. They end by 15 days up and 15 days down. So be very careful. If you're buying, you can buy in here, but make sure you know what your risk parameters are, when you're watching this, because we're seeing lots of divergences, especially in the New York Stock Exchange index, and then also, of course, in the advanced decline line. And the advanced decline line has been telling us that this market has not made new highs yet. I'll post this up so you can take a quick look at it. This comes from our good friend Ed Carlson up at the Market Technicians Association up in Seattle, and he's also looking at the breadth of the market, and we'll be able to see what's going to come on. This is a new moon that's coming up here, folks. This is not a full moon. This is a new moon. That happens on Tuesday morning, tomorrow, very early, I believe 7:30 a.m. Eastern Time. And so we'll be right back, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the flag is up and we are off to trading, and we're going to take a look here at the long-term Treasury bond chart. As you can see here, we have a very interesting cycle here. It's a 75-week cycle. It is due to come in last week, and we did make some type of a low there. I think the thing to watch is the fact that we made that 1.618 expansion of the April low. We're also at a 50% retracement of the low that we made back in 2014. I don't think there's any question that rates are going to go higher, the Federal Reserve is way behind the curve on this because of their quantitative easing program, but we want to keep an eye on it because the fact that we are looking at something that would be, very, very dramatic as far as a short covering rally. It could rally at least 11 points, and that would only take it up to a 382 retracement. This market is tremendously oversold. In the financial press, they're talking about the fact that all of the big professionals are now short the bonds, and it was very nice of them to tell us that, not until they got down. I mean, we had that butterfly pattern form way back in July when nobody thought rates could go higher. Now we're at an area where I think we're ready for a short covering bounce, and that's what I'm looking for, is a potential for a short covering bounce. Again, that will also be related to what's happening with the U.S. dollar. If we take a look at the Treasury bonds on just a little bit smaller time frame, going back over the last 10 days, you're going to be seeing this three-drive pattern that we had here that we were talking about on the air on the 23rd, the day right before Thanksgiving. And as you can see, the market made a low there, backed off one more time. We got as high as the 61% retracement last night at the 153.20 level and then backed off a little bit. But this is another market that looks like it's really ready, for a certain type of a really, really, really good rally. Okay, we've got our first question here, and that is about the biotech index. I'll bring this up and let you see this. Now, folks, you have to remember that the biotech index was the market that led the whole thing up starting in 2009 in March. That was the one that was the strongest. It moved the most. It was the largest of the group, of course, of those indices that moved on a percentage basis. And as you'll notice back in July, you'll see that island reversal pattern that we had here. We had the ABCD bottom down there in February. We had the a triple bottom pretty much into election night. Then we had the rally, and then again you've had this 135 pattern where you've had lower tops. This market is lagging badly again. So this is if you're going to buy something, if you want to buy something on sale, that would be the one to take a look at. But this is what's going to be interesting here is what occurs here this particular week, because we've had these tremendous runs, and believe me, these are how markets end, folks. They don't begin this way. Just take a look here at the IWM. Now remember, this is a small cap, and this is like trading pocket change in foreign exchange markets. But you'll notice that we've had a market that's been up 15 days in a row. That's actually, it not only broke a 20-year record, it broke a 31-year record. It's been 31 years since the IWM has been up 15 days in a row. So it's very interesting to watch, what's going on with this particular thing at this time. So we want to watch it very, very closely because it's got several gaps in it, which mostly these gaps are filled. If you go back and look at the chart, you can see that that's what you're watching here, with some of these things, and we'll see how it's going to end. I was listening to John Logan talking to him about the bullishness of the S&P. I can certainly see that, but we are over a key time here to see what's going on. Any move above 2214 would tell us that we could possibly make 2220. But folks, this market looks like it's running out of gas, and just from the standpoint of the advanced decline line and the standpoint that there's discrepancies in some of the other indices, mainly the New York Stock Exchange Index and also the NASDAQ 100, which has also been one of the leaders. So these are just a few of the things that we're looking at with this key time coming in here today and tomorrow with the new moon coming in. Remember, that could stretch out all the way one day before, one day after. So it's the 28th, 29th, or 30th. It could be any one of those days, signifying a potential top coming in here. So we need to watch that with a little bit of what we call interpretation of what's going on. Now, the other one we want to look at here is the Japanese yen. That's another really big one. We had a big move in this last night. I wanted to bring this to your attention. You'll notice the Japanese yen on Friday was making that 3 drive to a top pattern. We were talking about that pretty much when it was on the air. The market came down and then rallied to a 61% retracement at that 113 level, and then closed at around 113.04, and then it opened a little bit lower on Sunday night and proceeded to drop 150 points very, very quickly. And after that time, the market actually made a perfect Gartley on the way back up, where it's trading right now at this 112.60 level, which is another reason to pay close attention to this, because if it can break above this, this is most probably telling that we're going to be looking at a market that, let's just show you what this looks like right now so that you'll be able to see it in visual form. You'll see the 3 drive to a top pattern that we had back on the 24th, and then you'll notice how the market broke all the way down to that 111 and change, and then we made an absolute perfect ABCD pattern up at this 112.66 level. The high has been 112.74. We're trading at 112.59 right now. So that is a perfect Gartley pattern, accompanied by a 3 drive to a top. By any stretch of the imagination, this would be a change in trend on a short-term basis for sure. So you want to watch that. If you looked at it real closely and looked at the lower highs that we've had over the last several days, that would also be a 135 pattern, because the time sequence that just occurred also fits nicely. So this is one of those times where you don't have to risk very much when you add time and price together to see how things are really moving, That's the key of what we're watching here when we're watching, some of these currencies. And believe me, that's the case. Now, we've had some interesting moves here in some other commodities last night. We had a really big move in soybeans, and I believe, I know what I want. No, I've already shown the Euro one. Not worry about the soybeans, because most of you folks don't trade that, but it's at a really nice move here, about 15 cents overnight. We're still trading about 10 cents higher, but we've got this new moon coming up tomorrow, which will probably have a great deal of effect, with some of these things that we're watching. The other one that's interesting here, if we take a look at the oil market, give me a second here to pull up the oil market, because we hit some pretty good support last night, and we've rallied to get back above on the day, which is a positive thing for the crude oil market. So we did get down really close to the exact 61% retracement of this move by 10 cents.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right.
The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I posted the chart of the crude oil overnight so you can see that it gapped down. It just missed the 61% retracement by about 10 pips, and then, of course, has rallied over $1 or so a barrel, and it's held up relatively well. We did have a little bit of resistance at that $47 per barrel level in crude. So sort of keep an eye on that as an area. If we get above 47.50, that would most probably tell us that we're getting ready to go probably a whole lot higher. That's the way I would be watching this for today. So someone's asked me a question of looking at the stock market. Have you ever seen anything like this? Well, I'm sure you've seen everything, patterns through everything, but we saw an election event that totally surprised everyone. Some people were more surprised than others. Of course, the financial press was surprised, but the overall press was absolutely annihilated. They were so surprised that they missed everything, much like what happened with the Brexit, and that's what happens when markets get lopsided. That's what happened with Brexit. If you remember, the FTSE was way down and rallied to go up and make new highs on the year. It was such a big surprise. And that was supposed to be a bearish event. And everyone said that if Trump got elected, we're going to have nuclear war and a depression and everything else. And what did the market do? Dow Jones immediately rallied, 1,500 points, and the Russell rallied 20%. We've had some, tremendous moves here. Some of them are definitely outlier events. When you see a move of like the Russell, up 15 days in a row, breaks a 31-year record. But folks, records are made to be broken. It might go to 37 days or 42 days. You don't really know. The one thing that you want to keep an eye on is the one thing they can't do from when you're watching technical analysis is they can lie to you, they can give you misinformation, they can hide information from you. But the one thing they cannot do is they cannot hide. If markets go up, it means there's more buyers. If markets go down, it means there's more sellers. That's really all you really need to know, because all the other stuff is just in the gray area that you're never going to probably truly understand, how many soybeans are actually out there, or, any other thing that's related to the fundamentals. I looked at fundamentals way back in the 60s, looking at, production in silver and corn and stuff like that. And it wasn't until I met my teacher, Dr. John Noblet, who was, a technical analyst. He was also a statistician from Yale, and I took 2 classes from him in my MBA program, became friends with him, but he explained to me that it really makes no difference. All that matters is that bar chart, because that tells you if there's more buying, prices are going up. If there's more selling, prices are going down. So that's, what really is what it's all about. So We've seen many times where the market's had bearish news and continued to rally, and it's had bullish news and totally falls apart. So just follow what the prices are doing, and that'll give you a pretty good idea of what is going to happen here. But frankly, when I looked at this doing the newsletter this week, it was very apparent to me that what you should be this week is you should be long bonds, short stocks, and long gold. That's the way it looks. I don't know if that's going to be the right way to do it or not, but that's the way it looks from the cheap seats here in Tucson. Those are the patterns that I'm looking at that make sense to me as far as the best as far as risk-reward ratios of the things that I see happening at this particular time that we're in these financial markets. And believe me, this is going to increase in volatility. We're just beginning to see this. We went through a period of virtually no volatility here for so long. It's just been, really, really hard to fathom. Now, so we've had a question here about the volatility index, the VIX index, and I want to bring this up to let you folks take a look at it here. You'll notice here that after the original drop on Monday, when we had to move up above 19,000 in the Dow, that was telling us, that I thought there was a possible high from last week because we had an astro date that just disappeared, and now we're looking at this one that we're having today, November 28th. That's why if we went above 19,000 in the Dow, and everybody watches not everyone, but the financial press and the public, they watch what the Dow Jones is doing. And we went above 19,000. That told us that it most probably had a number of 19,168 as a possible high, which was the 1.618 expansion, and that's exactly what we hit on Friday. And so whether that's going to be the high or not, I don't know, but I love the 1.618 numbers because if you get above 1.618 numbers, I can tell you without any qualms at all that this old cowboy has no idea where it's going if you can bust through a 1.618 number. That's the tip of the Fibonacci spiral, and as far as risk-reward ratios, that's as far as you can go. Now, some people, when it breaks through the 1.618, can be a buyer, and frankly, you certainly want to be a buyer rather than a seller, but the fact that it hit that number exactly on Friday was interesting, and it did it right on the close with a move of about 40 Dow points right on the close, and there were supposed to be large sell orders coming in, is what they were saying, and it was of course the slowest day of the year. They closed 3 hours early, and so it was interesting to see how that happened, where someone faked someone out, and but that happens all the time there at the corner of Broad and Wall. So you want to watch that to see see how things are going. Okay, one other question that someone had was about some of these other indices. We've already seen the Dow Jones in the utilities go to exactly a 61% retracement. That's one of the reasons why we're looking for this bond market, to have a little bit of a rally. So those are the things, that we're sort of keeping an eye on today. But that utility index was a perfect Gartley there. It's held it. It's rallied a little bit. We've done very little in the bond market. We're still within 1.5 points of the lows, so they could easily break through that. We need the market to get above 154 basis, the December bonds, and that'll be interesting. Now, the other thing that's going to happen is next week we're going to be switching over from December to March Treasury bonds, and they're going to be trading at a discount, so that number will have to change. You'll have to make a little bit of change in the support and resistance on this, but it'll still be easy to do because the numbers will be very, very close, at least from a percentage. And they keep trading December bonds for another couple of weeks, even though the open interest keeps dropping. That's another reason why the bonds look interesting, is the fact that we've seen some drops in open interest as this market has come down, and that is a bullish sign. Whenever open interest drops and prices go down, that means that the shorts are covering their positions and the longs are exiting the market, and that makes for a bullish area for a short covering rally. So we'll see how this is going on. We'll take a little break here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to switch over here to the Canadian dollar versus the U.S. dollar because it has such a high correlation with the crude oil market. As you can see here, the Canadian dollar has started to move lower. We've come down to the area we're nearing that 134 level. We're almost ready to take out the lows of last week. We got up to 135.50 again last night, almost to it, 135.45, and now we've started to back off. We're back off more than 100 points in the Canadian dollar so far. That is the reciprocal of what's happening with crude oil. Crude oil has rallied a little over $1,000, and the Canadian has dropped $1,000 because the correlation on this is extremely high because Canada, of course, is very famous for oil production, and they rely heavily as part of their economy. So that's we try to watch that. It's hard to trade them both. You've got to trade each one of them separately, I believe, because each pattern is a little bit different. They both trade extremely well The Canadian dollar versus U.S. dollar is much, much larger than the crude oil market because it's a currency from a country almost the size of Europe. It's just, I don't know if you folks know this or not, but Canada has 82% of the population of what Europe has. So it is a very, very large country, and frankly, we're very lucky to have them on our northern shores because they've been a very strong support of us through the years. And the way things are going in the world, we're probably going to need a lot of support as we go through some of these things. The last thing I wanted to bring to your attention is the fact that this long-term monthly chart here on the S&P, if you'll look at this, and if you'll take the time to watch it, what happened back into 07 where we made a slightly higher high, and the high that we made so far as of Friday was an exact 1.27 of 0.5, and that was what happened in 2000. We also did the same thing when we went up and made a little bit higher high in March of 2000, and then of course the market dropped. The NASDAQ dropped 85% from 2000 down into the low of 2002. So remember that market that can give you $1,500 has the chance to take it away. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.